I mean, when we look at what happened back in the 80s and early 90s, also known as the junk wax era in sports cards, it was a little bit crazy. There were multiple manufacturers making these cards. They were putting out product just on a whim. Wall Street was involved, so they wanted to maximize profits. There was a lot of corporate greed, a lot of crazy things going on across the board. And unfortunately, a lot of the people that were partaking in the market at that time were speculators who didn't understand how these markets work, who didn't understand that at some point, this market, this too shall pass. Meaning all these profits that were easy come, easy go, eventually it was going to end.
Yeah, so Shawn, go ahead and introduce yourself, because I'm pretty sure a lot of people are dying to know.
Sure. My name is Shawn. I'm with Reserved Investments. That's my YouTube channel. I've been active in the antiques and collectibles trade since the age of 12, where I learned from very educated mentors in the trade how the actual finance goes on behind the scenes of the antiques and collectibles trade. I currently write for Antiques and Auction News, which is a weekly publication that centers around antiques, collectibles, and the markets that they serve. My columns appear in that particular publication every 2 weeks. I am also educated in business, economics, and finance. I have a bachelor's degree from Albright College out of Reading, Pennsylvania.
Okay, yeah, yeah, that's great. Yeah, so a little bit about me. My experience is kind of broad. Originally, I was a nuclear missile officer in the Air Force. The reason why that's kind of important is I know quite a bit about geopolitics and kind of like certain things that are going on in the world and how it kind of affects a lot of different things. A little bit about how it affects the economy, and then I am currently a PhD student at Yale University. I study human decision making under fMRI, and the lab I'm in is Afat Levy. She's kind of a superstar in human decision making, and one person who's in our lab, Paul Glimcher. He's a professor at NYU now, but he's one of the leaders of neuroeconomics, and I'm actually very interested in neuroeconomics. Is basically is basically you're looking at how understanding how and why people make decisions, but instead of psychology, you're putting more biology to it, and it's more replicable. But also, I've been involved in more so like the card market and a little bit of the comic book market, and also trading cards like Pokemon, Yu-Gi-Oh, Dragon Ball Z, stuff like that. And when I came across your channel, the best way I could put it was you were making a lot of sense, and a lot of people who seem to be I would put it, the blind leading the blind weren't making as much sense because there were certain things that weren't necessarily adding up. And over the last year or so, I have met either online or in person a lot of the content creators, and some of them are more influential. And I think me doing this and then me talking to them will have them more alert to your channel, and hopefully help them make better content as well. This is a little more of a basic one, but like what really separates like investors from speculators in sports cards and TCG and the TCG market?
Well, sure. Well, let me start with what separates basically collectors, speculators, and investors. A collector is pretty much somebody that just has a passion for something and wants to assemble items of value bought typically on the secondary market in their own personal collection. That's really all a collector is. Whether you have 5 items or whether you have 100, doesn't matter the value of those items. That pretty much differentiates what a collector is. That's the defining term. A speculator is somebody that comes into these markets. They may be a collector, they may even be an investor, but it's somebody that wants to make money over the short term. Speculating in the antiques and collectibles trade has been going on almost as long as the trade has been around itself. It's nothing new. It's just a lot of speculators, they don't understand the basic fundamentals. Now, an investor is somebody that could be a collector. They could also speculate at times, but there's somebody that comes into these markets and they're able to control their emotions because let's be honest, collectors are passion driven. So a collector comes into these markets, he sees, "Ooh, I love comic books. I'm going after this." He
Hmm.
doesn't necessarily pay attention to the market dynamics as to why that comic book is selling for X price on the secondary market at present time. An investor looks at these markets from a financial standpoint. He's able to control his emotions, even if he's passionate about the item that he's buying. Most are that are successful. And he's able to pull back and say, this item is selling for X right now. I feel, based on what I know, this market could be selling for Y or Z sometime in the future, which could be higher potentially if he's going to be selling or buying that particular item, or it could be lower if he already has the item. He paid a lower price for it. Now he wants to sell into the market and capture those gains. So it's basically the mindset that's employed. That really is all that separates a collector, speculator, and investor. It's the mindset along with the knowledge behind it.
Okay. So the next question is that there's been a lot of talk about there's this common narrative in the sports car market about Fanatics and them taking over and buying tops. And it's common narrative that, the sports car hobby is that Fanatics will take over sports cars and save the hobby and make the products and bring more investors and more collectors in and improve the secondary market. Why do you think this narrative is correct or incorrect?
I think there's some truth to it, but it's more complex than that, right? I mean, when we
Mhm.
look at what happened back in the 80s and early 90s, also known as the junk wax era in sports cards, it was a little bit crazy. There were multiple manufacturers making these cards. They were putting out product just on a whim. Wall Street was involved, so they wanted to maximize profits. There was a lot of corporate greed, a lot of crazy things going on across the board. And unfortunately, a lot of the people that were partaking in the market at that time were speculators who didn't understand how these markets work, who didn't understand that at some point, this market, this too shall pass, meaning all these profits that were easy come, easy go, eventually it was going to end. So I think it's good right now that we have one company that's pretty much at the helm, that's going to control this going forward, that can kind of navigate the ship. But that's also a bad thing in a sense, because I hate to say this, they're going to do what's best for them, their
Mhm.
investors, and the people on their side of the proverbial pond that are playing in this pool. They're not going to necessarily do what's best for the collectors, the investors, the people that are out here loving the product, just want to own it, and also the individuals that want to make money on it. So that's where there's a little bit of a disconnect. If you want to compare this, look at Wizards of the Coast right now. They're owned by Hasbro. How they're handling Magic the Gathering right now is a complete mess. I mean, personally, I would go in and I would fire all of them. I
Yeah.
have no idea why Hasbro did not slaughter, I mean, financially slaughter that board for what they're
Mhm.
putting out and what they're doing to Magic the Gathering. If that occurs in the sports card market, it's going to be a disaster for at least the modern era market for cards. Now,
Mhm.
the bright side is vintage cards, we already know the market for that. So it could be, even if they would make a disastrous move and they end up wiping out a lot of the collectors that are operating in the modern era sports card market, they're just going to move right to the vintage stuff, which
Mhm.
really, in my opinion, is if you're trying to invest in these markets, that's what you should be going after for long-term growth potential.
Mhm.
The modern stuff is mainly for speculators. It's mainly for people to get a hold of that just love these particular products, meaning the collectors, the speculators, the people that want to have a little bit of fun. And unfortunately, some of the people that don't know any better that are willing to pay $50,000, $60,000 for a card just because it was one in a pack, not realizing that that's just mass produced scarcity.
Mhm.
And that's kind of the basics that I teach on my channel.
Mhm.
So I think it can be good if they can control it properly and they know how to run it, they know how to manage it. They actually bring in economists that can monitor the secondary market for the products they're producing. They understand when to pull back. On the flip side, though, keep in mind this is a greedy corporation, and all corporations are greedy. That's human nature.
Mhm.
So there is going to be this intense, how do I want to say this intense emotion to profit from this market at all costs. And
Mhm.
that's what's going to be bad for the collectors, the people that just want to enjoy this stuff and potentially speculate on it.
Mhm. So I would say probably monopolies are like you would want some kind of competition, I would assume.
Correct. And
Okay.
that's what's bad in this case.
Okay.
And that's what we're seeing with a lot of these collectible card games. It's all up to them to make the decisions.
Mm,
That's why some end up succeeding more than others, and some have dark eras, if you know what I mean. What I mean by
mm-hmm,
dark eras is there's dark ages where they made a lot of mistakes,
mm-hmm,
and that's what Magic the Gathering is going through right now.
mm,
Pokemon went through that many years back, but they pretty much got better and they understand the market better. So
mm-hmm.
there is a comparison between sports cards and the collectible card games.
Okay.
I do want to give credence to that because a lot of the things that we're seeing in collectible card games right now with serialized cards, with 200, 300, $400 booster boxes that only have one pack in them of cards, all this crazy stuff. That all came from the sports market. I mean, that's
Mm-hmm,
where they got it from. It's all mass produced scarcity. They're just borrowing from another market and they're going, oh, let's take this, throw it against the wall, proverbially, and see what sticks. That's
okay.
what's happening.